Hi traders and welcome to the technical analysis market wrap on the 15th of January. So we've seen some good consolidation in a lot of the majors this week, but it's provided some really good scalping opportunities and they're still really present. They're hovering between some pretty key levels. So we'll jump straight into the charts and have a look what we can identify for today's trading and early into next week. So we'll jump into the Aussie USD first up. We can see here on the daily that it's obviously still been tracking up. It's had a pretty strong week, really. Like every day's been pretty good, and it is trying to push new highs for the week, like even as recently as now at that sort of high 77s. The thing about this one for me is it's not really showing a lot of signs of weakness, even though it's failed to make a new high. You can see here that we haven't really seen that new high break through. The MACD is not really indicating any divergence. So I know a lot of the time we're using MACD to identify divergence in the market, but I think sometimes it's just as important to use it for what it is actually showing us as well. And that is that the MACD is agreeing with the price action. So we're not seeing any weakness in the momentum on the 12 and the 26 moving average. So, and you can see that even in the 20 and the 50, that both of them are still really rising. So even though price action is still struggling to get to that new high, we've got to give it a little bit more respect than just deciding that it's reached that level, because we do have the indicators really saying that it's probably still momentum is with the price action at the moment. So what we're looking for is a break definitely of this level before we get excited about going high. I'm not overly keen on, if it does come back to the 20, I wouldn't be overly keen on longing it off that, just purely because it hasn't actually made that high. What we're looking for really here is a break of this zone. So if the price action does actually get below this level here at around that sort of 76, 60 level, then we're going to have a confirmation of a series of lower highs and lower lows on a daily chart. Now that is significant, okay? So that's going to be the significant momentum shift that we need to say that this has reached its peak. And until that happens, I'm going to be pretty reluctant to actually short this. Going to the smaller time frames though, you can see here the 1 hour, even it's a little bit messy. It's been pretty sideways, really hard to actually get into. If you go down to a 15-minute chart, it's provided a few more trading opportunities if you're getting into these really small movements. But the truth is it's been really hard to trade. This is not one of those ones that you could have easily traded. What we've got is a series of higher highs and higher lows on the 4 hour, but again they're not really presenting a great opportunity, because even if they do make a new high from this point onwards, it's going straight into the serious resistance on the daily. So as much as it's a good sign, it's probably not enough to be jumping on and saying I'm going to trade with this confidence. So probably what you want to be looking for is a reversal on this one. Wait for the price to break down and get below this level on the daily. Then we've got a confirmed change of trend on a big significant time frame. But the smaller time frames are looking a little bit choppy because it is hovering in a very tight range. It's only hovering between, this week alone, it's only been about a 70 to 80 pip range, and it can be hard to pick when it's only moving so infrequently. So probably just to keep an eye on this one and just wait for it to actually either break high or break low. Either way, we're going to get a good signal to start to go long or short on the bigger time frame, and we can start scalping it with a bit more confidence. All right, we'll move on now to the US Dollar Cad. This one is an interesting one because it is really desperately trying to break low. It's hanging on for dear life at this level. We know how serious this level is. We've talked about it many times late last year and even early, as early as last week. It's a very significant level for it. If it closes a daily candle below this level, like below the 126, we know we're in for probably a pretty reasonable fall. I'm not wanting to preempt that, even though it's giving us all the signs that it wants to go down. It's also showing us, opposite of what the Aussie is telling us. This is that very strong support, and the MACD is actually saying that price is starting to wane, the momentum is starting to shift a little bit, and we can see that in recent price action that that we can see the price has actually slowed up. It's not dropping at the same rate that it was, even though it has had a bit of a weakness this week. It hasn't really dropped at an extraordinary rate like it was right through this area here. So it's one of those ones where you've really got to take it on face value. For me to be longing this, we need a change of trend on a 1 hour probably in the first instance. I wouldn't be looking for anything shorter unless you're absolutely scalping. If you're going for really short scalps on this one, you could take a change of trend on a 15-minute. We're obviously at very strong support, so a change of trend on a 15-minute, so a series of higher highs and higher lows could easily give you a scalp into 50 to 80 pips, which is fine. Like, it's probably good scalping opportunities on it, but you do need that change of trend. So you want to see the lower high, a higher high, higher low sequence, sorry, on the 15-minute chart. If you get that, probably the first target that we'd be going for is the 126.80. And that's not a bad move. Like, that's about 30 or 40 pips from currently where it is, but you wouldn't be taking it until about the 45 mark anyway. So, but by then it'll be above the 20 on the 15-minute chart, providing a reasonable opportunity. So yeah, definitely a scalping opportunity, but I wouldn't be taking a longer term position on this one until we get a change of trend at the very, very least on the 1 hour, but preferably, because it is such a serious level, I'd probably want to be seeing a 4-hour change of trend. Now, it looks like it's a long way away from that, which is, that's okay. It's part of trading. You've got to wait, but you can scalp in between while you're waiting for that to happen. And there's certainly some scalping opportunities in order. You're going to get some scalping opportunities if that happens for us. So what we want to see is a series of higher highs and higher lows on this one. If we get a series of higher highs and higher lows at this level on the US dollar CAD, I think that it's good for a pretty reasonable move back up, at least at the very, very least to the 20 moving average. But if it does get support from here on the 4 hour, I would think it's probably going to break that and start to push to the new highs again. So in the first instance, I would be aiming on that scenario. I'd be aiming probably for the 120. I'd be going for the 20 moving average first. So it's about the 127.50 level. By the time it starts moving up, that'll flatten out a little bit. But that's probably not really, even though that's the zone that you'd be aiming for, that's probably where I'd be breaking even, because I think if it does get enough momentum from this level, it should break the 20 and it probably should push up into the mid 128. So probably the mid 128 is the main target for actually taking profit. But I'd be probably locking in maybe a little bit of profit and breaking even at the very least at the 20 if it gets to the 127 sort of 40 to 50 area, because that's where it's the first real point of serious resistance for it. But again, a 4-hour change of trend at this level should see it break that 20 on the daily. So certainly one to watch and a pretty good one to trade, I think, if it gets the right signals. All right, we'll move on to the dollar index. Now, this is an interesting one as well. This is looking stronger than the CAD, obviously, because we can see that we've had a mixed week, but it's been able to maintain its level above the 20 moving average. How important that is very, very significant given where we are. We know that we're at very strong support here on the dollar index on the bigger time frames. You can see we had the big indecision candle about a week and a half ago, and it's tried to push down below the 20 moving average and is been able to bring itself back up. Very, very important that this dollar index holds up here. I do like it for a move up. I think that we can see a very strong potential for a change of trend, and if we do get that change of trend, so what we're looking for is the higher high, higher low sequence on this one. So we've got our trough, we've got our peak, we've got our higher trough now, and if we maintain this 20 moving average and we get a close on the daily above this level here, so above this 90 level, then we've got the lightning bolt effect that we want. And if that happens on a daily chart, we're going to be pretty satisfied that the dollar strength has returned. That's going to bode very, very well for the US dollar CAD and the US dollar yen, of course, and it's going to significantly weaken the euro USD, which we'll look at in a minute. So this is looking, from a standpoint of, where it's at. If it does get the sequence of higher high, higher lows, it's going to provide some pretty good opportunities on a few pairs if you're not trading this one in particular. But what it's also going to do, if it does that, is it's going to confirm the inverse head and shoulders as well, because in order for it to get to this level here, it's going to give us the inverse head and shoulders that we are looking for at that level. So you can see there, that is the left shoulder, we've got the head, and this is the right shoulder. Okay, so if price does happen to get up here and break and close above this neckline, it's going to confirm an inverse head and shoulders. MACD is certainly in our favor, but just as importantly, and this is why inverse head and shoulders are actually so important when they do break, they also come along with the power of the lightning bolt, the higher high, higher low sequence. And on a time frame like the daily, it can bode very, very well. And I would be expecting that the first target for this one would be the 92 again. So we could see some serious strength in this, and it's going to play a big part in the US dollar based pair. So keep an eye on this one, keep an eye on it very closely, and make sure we keep above this 20 in order for this to play out, and set an alert for the break of this neckline, because that will be a significant break. All right, we'll move on to the euro USD. Now, as we know, this is basically the inverse of the dollar index. So this is going to do the direct opposite. Unlike the Aussie USD, which is maintaining pretty strong momentum on the MACD, this one's a little bit different. The euro is a little bit different. It is kind of looking a lot more extended. It has actually sold off quite a bit more, and it's actually pushed down below the 20 moving average, and that is significant because the 20 moving average has been it's pivotal in this whole move on the euro USD so far on the daily chart. And you can see here that we've had basically 5 trading days now where we've been underneath the 20 moving average. So even though it's trying to test it from below, my inkling on this one is probably that it's going to show weakness. And it's no surprise really because, the dollar index is looking like it could potentially maintain its strength and push up higher, which is definitely going to push this one lower. If it does happen to get down and break the 50 moving average here on the daily, it's going to effectively make the sequence of lower high and lower lows. So it's going to basically be the lightning bolt in reverse, which is what we want for a change of trend on from an uptrend to a downtrend, of course. And this is probably the better trade than the index, the dollar index itself. So I mean, we know we're going to be aiming for around that sort of 120 area in the first instance. I'll put a horizontal line at the 120. This is basically our key target, okay, but it needs to break the 50 moving average in order to do that. And if it does that, you've got the sequence of lower high, lower lows. It should be pretty much a formality to actually get to at least this level before it starts to pull up, and that will coincide with a 92 on the dollar index. It would be very, very similar. So again, it's a bit of a watcher, but this has provided some reasonable trading opportunity on the scalps as well. So if you go to a 1 hour chart, you can see here that it's had some pretty good opportunities to short off the 20 moving average several times this week. Okay, and you can see, well, not this week, that was late last week, but you can see here, this is the 20 moving average playing out again. Now it's found support at this level here. Again, this is one of those ones where if you're scalping for really small zones until it actually does get the big move. There's still a little bit of waiting involved in terms of, it's not certainly giving us any indication that it's going to go long at this stage because the daily looks weak, the 4 hour looks weak. And as you can see, we're in a downtrend on the 1 hour as well. And we haven't really had a change of trend. We haven't had a series of higher highs and higher lows, even as low as a 1 hour time frame. So nothing is giving us any indication this is going to go long anytime soon. So in order for this to go long, we have to have a sequence of higher highs and higher lows on a 1 hour at least. So my preference to this one is probably to short it. If we do get those breaks of the key zones, if it starts to break below the 20 again and makes a new low from the 121 sort of 20 area, if it breaks this low here, I'd be starting to push down into the mid 120s. That's what I'd be aiming for, the 120.50 zone, which we know is strong. And then hopefully in the first instance, the 120.50, and for the longer term move, at that point, the lightning bolt will be confirmed, and then a longer term position can go to the 120. So a couple of options there. You can go for the smaller take profits with smaller stop losses, or give it a little bit more room to move and go for the 120. But again, we want price to confirm what it needs to do, which is effectively make the lightning bolt sequence on the daily chart. If it does that, it's pretty much happy days down to the 120. All right, we'll move on now to the US dollar yen. This is one that, again, it's been in a downtrend for a very long time, but it is starting to show signs now that it wants to basically break this cycle. You can see now that we've broken above the 20 moving average, and it's effectively been here all week. It's held above it all week. It's effectively mimicking what the dollar index is doing, which is not always the case with the US dollar yen. It's one of those occasions where it is mimicking it at the moment, which is actually a good thing. I like it when the US dollar yen is playing the game of the dollar index because the dollar strength is, it's in the right place. So even though it's not doing good with the CAD at the moment, it's doing good with the US dollar yen, and this one seems to have a lot of room to move. So if we get what we're looking for here, you probably guessed it, is a break above the 105 level. If we get, the 104.50 level, sorry. If we get a daily close above this level here, we've got our lightning bolt effect that we're looking for, the change of trend, the all-important daily change of trend. It hasn't happened for a long time on this pair. And if it does happen around this level, which is a very key zone for it, it did get to as low as 102.50. So, realistically, if it does hold above this 20 moving average, which I love, when a lightning bolt effect does kick up from a very strong support zone and then find support on the 20 above it after it's broken through, I really love a break of this level because it really solidifies the lightning bolt. It's found support at the exact place that it needed to. You can see it's a bit of a support zone here anyway. If it does that and creates a new high on a daily chart, this could go long for a couple of hundred pips, and I think it's got plenty of room to move from up to the top end. It can get to this level here, which is going to be the first real level of resistance, which is around that sort of 106.50. So it's got a lot of room to move, but we need that lightning bolt effect. If it does that for us, it's going to be providing some pretty good opportunities for us, I think, especially if the dollar index does the same sequence of higher highs and higher lows. All right, the last one we'll have a look at today is we'll have a look at the Aussie 200. This one here is basically, it's been flatlining and it's been channeling for quite some time now. Okay, so we know that we've got the channel here. You can see that it's been in this zone for quite a while, like, you know, basically since the break of this level here. It kicked up high and it's been in here since around the start of November. It's been, you know, hovering above the 20, but it is really, really testing it. So it's one of those ones where it's trapping itself between the top resistance, which is around that sort of 67.50 area, and the 20 moving average now. So a key break of either zone is going to be significant. If it does, I mean, this channel that it held up here, when it did eventually break, it did really shoot up quite quickly. So it's one of those ones where if we do get a break to the upside, you know, more than likely it's going to try and search for the 7,000. So it's got a lot of room to move to the upside. There's not a lot of resistance in front of it after this level. But just as importantly, if it does break down below the 20, you would think that the 65.50 would be a formality because it's going to go back to the bottom of the channel. And failing that, if that level doesn't hold and the 50 moving average doesn't hold it at that point there, we might start to see that decline that everybody is really expecting on this indice. There's, you know, the MACD is obviously flatlining here. You can see that it's really starting to drop. And all that's indicating really is that the momentum has left the moving averages. And there's no surprise that we can see price actions telling us that, because of course, when price action is not doing anything and it's hovering, the moving averages are going to get closer and closer together and start to ribbon. And the 12 and the 26 are going to do that a lot quicker than the 20 and the 50. So that's what this is basically telling us, that the 12 is nearly level with the 26 again. So it's not really giving us anything we don't already know just through this price action. But yeah, the 20 moving average is what we're using as the key here. We'll see if it's getting trapped in a smaller and smaller range, as you can see, coiling. So generally when a market starts to coil like this, it's going to break pretty hard one way or the other. And when it does break, I'd be probably happy to take either way. I would be thinking that it's really a guess as to which way it could go, because there's no real indication. I'm not taking much notice of the MACD here, because all this is price action playing out in this channel. So it could break up just as easily as it could break down. So the key here is to actually wait for that break, and when it does break, trade in the direction up from the. If it breaks to 67.50, pretty much a 69.50 is the first level that it'd be finding really strong resistance again. But if it does happen to break the this little zone from the 20, the 65.40 level here, which we've got this green line, that's going to be the first target for it. And if that doesn't hold, it's going to be a big drop all the way down, probably to 6,200, which is a lot of good judges are predicting we're going to see that at some point this year. So whether that's early in the year or later in the year, that's anyone's guess. But we let price action tell us that. We're certainly not going to guess. So what we're wanting to do, wait for this one to break either zone, and happy to trade either one. I've really got no bias either way on this one. So I'm going to watch the price action carefully. You can see it's trapped very, very strongly here. As soon as it breaks this little zone here, we can trade it either long or short depending on the break. So I hope everyone's had a great week's trading. I reckon we've had some really good opportunities on a scalping front, and they're not looking like drying up anytime soon throughout today's trading day or even into next week. So hopefully that can keep up for us for a little bit longer yet before some of these big trends establish, and we can get involved on both the scalps and the longer term trades. Have a great weekend, everyone. I look forward to seeing you all next week.